Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks of drstocks.com. That's DRSTOXX.com. We've been in business every market day since October of 2002. And if you want to join us in the live trading room where this is coming from today, the live Discord room where I share all of my trades, entry, stop, target, reasons for the trade. Go to drstocks.com, click the subscribe menu, scroll down to the live trading room, and you can add that on at a low price. And if you want to add on our brand new live options room at an even lower price, you can do that as well. All right, guys, let's go ahead and take a look at some charts. So we're having a nice market day. Today is the 6th of June. It is a Friday. We had the non-farm payrolls out this morning. They were better than expected. Always a good thing. Unemployment rate was in line with expectations. Always a good thing. Uh, Personal income, from working. If you've got a job, you actually have to work for a living. Then that actually went up a little bit too. That's always a good thing as well. So the economic data has been good. I wouldn't say great, but it's been good. We're in kind of a slow growth phase, and there is still some uncertainty out there with the tariffs, and things are still being negotiated. And we were promised yesterday that we were going to get a China deal in about a week. So that's on the horizon. And if we do get one, and it is not horrible, we should see the market really catch a very nice bid. All right, we'll take a look at indexes here. You're going to see that they've been in a pretty tight range. Let's take a look at the S&P 500 using the micro E-mini S&P futures contract. This is the one that we trade a lot in the live trading room. If you're interested in just trading options, and it's mostly long calls and long puts, you can join the live options room. In the live trading room, which has been around for about 5 years now, we trade just about everything else. We really do. All right, here is the chart of the S&P 500, right? The top 500 blue chip stocks in the market today, and you're going to see several things going on that are not robustly bullish, but are leaning in a bullish direction after a fair amount of bearishness. Right here, late March, middle of March, late March, we had announcement about tariffs. The market cracked on that. And I'm not exactly sure where Liberation Day comes in. I'm not sure it's in one of those pockets there, or maybe it was this day right here that was anticipating Liberation Day, and then when it came out, it was a lot worse than we expected. Right, the tariffs were higher, and they were on more countries than anybody anticipated. They really kept that under wraps. The market just cracked right at the end. This is the end of March. I'm sorry. This is February. The end of March, the market cracked. Liberation Day was not a good day for the market, and we went down as fast and as hard in as short a space as you'll ever see in trading history. You do get crashes like this from time to time, but the kind of downward spiral we had in major indexes in such a short span is something that you really don't see very often, maybe 2 or 3 times in the entire history of the market. So that bottomed out on the 6th of April, and it was one of the best buying opportunities of the since COVID, I would say, since the COVID bottom. And it shot straight up in a single day. A couple of days later, it was a little too far too fast, came right back down, hit a higher low. That's the first bullish thing that we see on this chart. Higher low after lower low, lower low, higher low, higher low. First bullish note that things were maybe going to be okay. And then we took out the most recent pivot high, that big green stick, right? The highs of that day, we took it out on the 24th of April. That's the second bullish thing that we saw. The third bullish thing that we saw is the 21 EMA. Price finally got above it after being below it. You can see being below it from this whole period here. There's a bull trap right there, a nice bull trap. Got above the 21, got above the 200, and then it got slammed on Liberation Day. We finally got it back above the 21 period moving average, and the 21 period moving average is starting to curl higher. That's bullish thing number 3. And the 21 crossed over the 50 right here as the price got above the 50 period moving average. 2 more bullish signs. And if you look down at volume, you're going to see a lot of green bars, very few red bars. And for the most part, the green bars are taller than the red bars. That is accumulation. That is a bullish volume balance. That's bullish sign number, I lost count, 5 or 6. We got up above the 200 period moving average finally. That's bullish sign number whatever. And then we tested the 21 and bounced, bullish sign number whatever. And now we're breaking out of a 3-week high tight base above all of that fray, and that's really a good thing. Okay, high tight base, you need 3 weeks at least of sideways price action, pretty much what we got right in that area right there, about 3 weeks. Today is the first day that we are above that range, but we haven't closed yet. We still have an hour and 45 minutes of trading. Anything can happen. Yesterday, we had a beautiful day just like this. You can see we were up pretty close to where we are right now. And then Trump and Musk they put on the boxing gloves and they started boom, 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 back and forth, trading barbs and insults and all kinds of stuff. We don't need to get into all of that. I don't even know if I fully understand all of that, but it happened. The market didn't like it. Tesla really didn't like it. I'll show you that in just a minute. And everything just crashed and closed on the lows of the day. So we didn't get our breakout yesterday, and it was on heavy volume, and that does put some bearish technical pressure on the market. But it was totally reversed today. Everything kind of phased out overnight. You know, they didn't really kiss and make up, but I think behind closed doors they're negotiating something. And the market's okay with the data that came out this morning on the farm payrolls, and we're just back up, right? We're back up to the top of the range. If we close here, it is a breakout, but it's not confirmed until we get a follow-through day next week. We have 3 days, Monday, Tuesday, Wednesday, in which to print a follow-through day. What is a follow-through day? Follow-through day is where the open is above today's open, and the close is above today's close. And the range of Monday, Tuesday, or Wednesday, the range of that day is a higher low and a higher high. Then that's a follow-through day, and we won't have that until next week. And if you don't have one in 3 days, you know, if it starts pulling back or starts printing an inside day bar, or starts to just consolidate this move, then the move is questionable, right? That's kind of what happened right here. Breakout day, right? We had, I don't know if that's considered a follow-through day. It is, the close is not quite above the high, but the intraday high is above the high and the low is above the low. But it turned out not to be a follow-through day. And of course, follow-through days aren't you know, they aren't, it's not a certainty that it's going to continue, but it is something you want to see. And it just got slammed. It got slammed on Liberation Day. All right. So anyway, all stuff is good. All of that is looking good. We've got all-time highs coming into play very soon. I don't know what the number is exactly, but about 61, 57, 58, somewhere in that area. And we've got a bit of upside between now and then. We can trade that with some micro E-minis. We are actually trading that with SPXL, which is the 3X bullish version of the S&P 500. It's an exchange traded fund. We've got that long in the live trading room. And we've also got TQQQ. So let's take a look at the NASDAQ. Pretty much the same thing. And the reason for that is that the reason why the NASDAQ and the S&P look very similar, they often do, is because they're both weighted indexes in the same 8, 9 tech stocks at the top. The biggest companies on the planet, they govern the movement of both of those indexes very strongly. So if those guys are happy, both indexes will pretty much show the same thing. All right, here is your 3-week high tide base. We actually, I mean, I'm not sure if I'm drawing the line exactly where it should be on the top, but it seems like it did break out a couple of days ago, confirmed the next day, pulled back on yesterday's surprising sell off and is right back up to those highs again today. It would be nice to see within the next couple of days yesterday's intraday high get taken out, but we're just going to move up our stop. And when it gets up here to around 22 235 or so, what would that be on QQQ? QQQ is really the number we want to focus on. Looks like 540. Yeah, it's going to be 540 on the QQQ as an all-time high, and I think we're going to get there in next week, maybe. Really, seriously, next week. And for the S&P, it's a little bit above 610, like 611. We'll call it 611. So those numbers undoubtedly are going to get hit on the current run. What happens after that is up to the market. All right, small caps. I'm kind of waiting on small caps to get a little friskier. We're just not seeing. We're not seeing two things. We're not getting above the 200 period moving average, which I would like, and we're not seeing good intraday ranges. We're getting a gap up with the futures overnight, but we're not seeing continuation throughout the trading day. That's that's a bit of indecision. So there's not really yet a whole lot of interest in the small cap index. I would like there to be because it's always a lot of fun to trade the small caps. That we can trade it with TNA, we can trade it with M2K. In the other room, we can do calls on IWM. But I just don't think it's quite yet ready. Now, next week could be a whole different story. However, and I'm not the only one to see this, we've been looking at this almost every day. There is a beautiful, very well formed, almost too well formed, inverted head and shoulders at the bottom of a fairly long downtrend. And if we were to go back 2 years, you're going to see that this downtrend has been there for a long time. The all time highs are a fair bit higher than they were back in November. And we've got the breakout today. Now, this is a big head, right? It's a deep head, about 175 to the neckline of, let's call it 210. That's a 35-point neckline or a depth of head. You add that to the breakout point, which is today, 210, let's call it 210.35, 245. So you're looking at a target price right up there, which is coincidentally the 52-week high. So I think that's going to happen. I really do. The only problem with small caps is that they really do well when we see yields coming down, lending rates coming down, mortgage rates coming down, um, uh, appliance loans and consumer loans coming down, and all of those rates that I just mentioned are still pretty high. Not historically high, but they are high for recent history. And I don't know. I just think that those are going to have to start cooling off a little bit and making the consumer a little more give the consumer a little breathing room on some of these bigger purchases, and we're just not seeing that yet. So small caps will catch a good bid. They're due. They're really due. But we need a couple of things to fall into place before that happens. This is the thing that needs to fall into place. We need to see these yields start coming down, and they just keep going up, right? 2.5% on TNX. That's your 10-year yield. That is not what the market wants. I've been thinking that the bonds are ready, finally, to break. Well, I guess they did kind of do that. They did break this this little short-term pullback, right, or a falling wedge. We can call it a falling wedge. It broke. It did not see a follow-through day. That's a reversal, a red bar. It's not a follow-through day. And now with today's gap and go to the downside, you've got that as a trap. And I think we're probably going to end up back down here in the pink zone. Sorry to say, because I would like to see bonds rally, which frees up yields, which means loans get cheaper. Liquidity starts flushing back into lending rates. And so all of that. So they're all connected. Let's take a quick look at gold. It is red today. Yeah, see, we got up here to this line, 34.34 or so, 34.35. And every time it gets close to that line, it's whacked right back down again, which probably means that the dollar itself is strong. maybe this is a reflection of the strong labor market that we saw this morning, and which means that the Fed is not likely to cut rates anytime soon. And a dovish Fed means good for gold. So yeah, gold is it's in a trading range. It's a high range, so this is up at all-time highs. Everything in terms of the moving average and the linear channel, it's all moving in the right direction. But with this sort of range, you want to buy at the lows. You don't want to buy up at the highs in the hope of a breakout. So to me, it's just a no-go zone for now, and until we see another good reversal. This is the day you want to buy, right? Right down there in the pink zone, reflecting the 50-period moving average. Yeah, it got slammed the next day, but that was the only one day everything was up from there. And here's another nice looking 3-bar reversal down here in the pink zone. And, every time you get down into the pink zone, you get a nice pop almost every time. But I don't think, I think it's going to get down there again. All right, I want to show you real quick. I'm going to do 2 more things here before I look at some chart requests. I want to take a look at some stocks that are setting up on my greens list. I have quite a long greens list, so I'm not going to go through all of these, but I'll show you a few that look interesting. And some stocks are on here that you probably have never considered before. They've been showing up in a variety of ways. Some are stocks that are being talked about in my pro trading group. So I'm a part of a group, about 20 people, men and women, who are professional traders. They trade for a living like I do. Some of them manage funds, some of them work for firms, some of them just trade their own family fund like I do. And we share ideas off of each other. I'm not in there every day, but most days I check in just to see what everybody's looking at. And sometimes I share what I'm looking at. But, there's some big fish in there. I'm kind of a small fish. So I don't know, maybe not. But I think of myself as a pretty small fish compared to some of these guys that work for Goldman Sachs and JP Morgan and all the rest. So, anyway, that's a good source of trading ideas. I only have 2 eyes. They have 40 eyes, and they're also connected to a lot of professional information that I just don't have access to. So really good to keep an eye on what they're looking at. So, and I've run some scans. Some of those stocks are here. I have a friend who's sending me a scan each morning of stocks that fit his particular parameters. He's a bottom feeder kind of guy. And we've had some really good success lately in some of those stocks. And then I have some on here that are just setting up very nicely technically. All right. So Tesla was, of course, the object yesterday of the wrath of the market because, Trump is very angry at Musk, and Musk is very angry. Not so much, I don't think, about Trump, but about the bill. Doesn't like the bills, too much spending. Kind of have to agree with him because we're in this huge fiscal deficit, and the bill is only going to be adding to that. I can see good things in the bill, but and frankly, I've looked at all the line items, the major ones, and I'm not sure where they could cut. Actually, I think the expenditures are necessary, and what's causing the deficit is the increased deficit is the tax cuts, and I'm all for tax cuts. So I'm not so sure how you're going to reconcile those anyway. That aside, they had this big feud, and everybody was worried that, the government's just going to start, and Trump actually said this, pulling back on subsidies for some of his businesses, not Tesla necessarily, although there's the EV tax credit, but that's been known for a while. And Musk doesn't seem to be worried about that anyway, despite what Trump said. But Tesla, everybody's worried, right? Everybody's worried that Tesla is just going to have this bad reputation and everything's going to go black for Tesla. Well, that turned out to be just woefully overdone, and as these things do. Now, here's Tesla, right? It's up here at 367 just about a week ago, and it shot all the way down yesterday intraday to 274. And if you're looking at the close of Wednesday to the intraday low of Thursday, yesterday, it was over 17%. It was almost 18%, 17.77%. Here's a statistic, and I don't have the graph in front of me. I'm sorry. I put this in the live trading room. I put it in the options room, and I also posted it to StockTwits and Twitter. There's a graphic. Every time Tesla falls on an intraday basis falls below 17%, what happens a week later, a month later, 3 months, 6 months, and a year later? Well, guess what? In every single case, it's up and up big, up really big. Average, this has happened, I think, 6 or 7 times. So it's not a big sample size. 6 or 7 times, 1 week later, Tesla from that intraday low to the closing price 1 week later, 15% on average, 15% up on average. Now, let's say it's 280. 15% of 280 is going to be 28 plus 14, 30, 42. So, uh, wait, 280 plus 42 is going to be 322. Am I right? Let's say 320. So 320 by next week. I think that's very doable. It was actually there yesterday. So, and it's already up. It's already up 6 or 7% from yesterday's close and about 10% from yesterday's low. So it's on its way. But then you go out like 3 months and it's 70% up in 3 months. You go out 6 months and it's like 130% or 40%. You go out 1 year and it's like 200 something percent. So I tell you what, if you bought some shares, and I did this myself, if you bought some shares yesterday near those lows, I didn't get it at the lows, but I'm green right now. I got it at 285. I think I bought actually after hours. Then and hang on to them for a year. We'll see. And guess what? 3 months, 6 months, and 1 year. All six of those previous instances, 100% up. All of them are up. Just that the average is that number that I gave you. Okay, that's Tesla. It's not really, in terms of technical setups right here, the only thing I like is that it's an inside day bar. It's holding the 50. It's a bit of a mixed picture, right? Because the LRC is falling and the 50 is below the 200 and the price is below both 21 and 200. So there's and yesterday's big bearish print is ugly. That's a big, ugly sell-off. But here's the thing, and this is why you need to know your news cycle, not only for the market, but for individual stocks like this. The feud between Trump and Musk, which caused the sell-off in Tesla and the rest of the market, has no real bearing on the overall economy. Yes, it is a segment of the economy. And yes, these are, you've got the most powerful man in the world and you've got the richest man in the world. And if they're having a fight, that's something to be worried about a bit. But I think they're going to make up in some way. And really, their feud is over politics, not over economics. So, and, Trump's economics themselves are market friendly, and Musk is not anti-market. So there's really no reason to be that worried. And so the market just overdid it, as it usually does. Fear is a much more visceral emotion than greed. The market's going up, it's driven by greed. We want more and more profits. We start buying more and more stocks, keeps the thing going higher. Fear is a lot harsher to deal with, and we hate it, and we just want to get out. Just get me out of the market no matter what. And that's what happened yesterday, and that was overdone. Fear is always overdone, and much easier to find the market bottom than the market top. I'm not a top caller. I don't do that. Yes, you can figure out some short-term pullbacks are likely, but not the all-time high or anything like that. Or we're entering into a bear market from the 52-week high. No, never do that. Never, ever do that. Market bottoms, much different subject because of that difference between fear and greed. Okay, enough about that. Enough about Tesla. PLTR is printing an inside day bar after a big red stick yesterday. You're going to see a lot of this all over the tech. It's up here near all-time highs. It is a must-own stock. I think it's a hold, not a buy. We'll see where that goes. I really like Sophie, and it's doing a lot right now that it wasn't doing about 2 hours ago. So I think I'm going to have to call Sophie in the live trading room. And here's why. So first of all, you've got deep value. You've got strong analyst support with very high price targets. And you've got a business model that will really, really really benefit from falling rates. And I think we're at peak rates. I have to suspect we are at peak rates. All right, and it's a nice looking inverted head and shoulders, and the yeah, just a lot of good stuff going on. Fresh MACD buy signal today, so I like Sophie as a kind of recovery play. It's not the strongest chart out there, but in terms of upside, I like it a lot. Jets is we're long some calls in the other room. It's breaking out like everything else today, breaking out of this nice little um, base that we've been seeing. We are above the 200, the 21's rising, the 50's starting to rise. And I know we're up here in the blue zone of a downtrending LRC, but given the market, given seasonal tailwinds of the airlines in summer, given the, where is oil today? I don't know. If oil is falling, and it has been falling, it had a rally, right? Oil went way up. You saw your gas prices go up 30, 40 cents a gallon. That reversed and is starting to come back down again. At least it was the last time I checked. So that's good for airlines. I like Amazon. It's another inverted head and shoulders. It's a nice rounded bottom up here off the earnings. Earnings did come down to almost fill the gap, but not quite. That's a good thing. As long as that gap stays open, that's a revaluation of the company. And now we're in a blue sky breakout, 3 month high being printed today. I like it. I like it. I like it. ARKK is not a buy. It's just a big green stick. You know my rule, big green sticks. And I'm surprised it's actually so strong today because it gapped up when Tesla gapped up a little bit, I guess. But it's mostly Tesla. Like 10% of the fund is in Tesla. But you're also in Hood. You're in, what else does she like? Roblex, Roku, PLTR, and there are some others in there that she likes a lot. And all of those guys have been doing really well. So good fund. Um, Nice breakout today. It was just a little late. I had it on my watch list, and I started looking at other things, and I didn't catch the open. Nice big gap up, but yeah, it looks good. Let's see if we can catch a lower price tomorrow. We're long AMD already. It's not doing a whole lot today, but it is coiling up, inverted head and shoulders, and just needs a little bit of some help from the market. EME is a like a construction firm, I think. And here's the thing: you're seeing these high tight bases all over the market in all kinds of different sectors. This is a nice looking, kind of dull, but it's a nice looking trending chart. And as long as it stays above the 21, right, you could buy it anywhere in here, put your stop below the 21 and just trail it higher. And I don't think it's going to pull back anytime real soon. ARES is an asset management firm, strong fundamentals, strong growth, and printing the same thing. I like these little rounded bottoms, right? Rounded bottoms very much better than V bottoms, but sometimes V bottoms really work well, like this one did. That's just such an over. Anyway, Duolingo. I think I'm going to take this one off. I've been reading some kind of negative comments on it. It's up pretty high. This is all-time highs here. It's a strong chart. It's a strong set of fundamentals. It's got strong IBD metrics, but there's some rumblings around Duolingo, and there's also a lot of competition out there. My wife and I, my son, we're all using Duolingo to study Italian because we go to Italy, almost every year now, and it's nice to be able to converse a little bit with people in the shops and stuff. So we use it, and it's great. I love it, but it's a bit on the woke side for my personal taste, and when you get into Duolingo, you start getting ads on Facebook and Twitter for everything else. It's pretty much the same thing. So they've got competition. They didn't have that before, and I think that's going to start hurting. XNCR, one of those bottom feeders that I was mentioning, we were in this one. I took profits a little too soon because today's a big reversal. But let me show you that reversal bar right there, that red flashing classic reversal bar. Opens up inside of the body of the previous day, travels up to take out multi-day highs, travels back down to close below the open and inside the body of the previous bar. This is a classic reversal bar. Looked like it was following through yesterday, and then everything just reversed. It was a trap. So if you're still long XNCR, hold on to it because it's probably going to get up here till about 1150 or so. Test that pivot high. And if it can get up above that, and it's a nice looking Adam and Eve bottom, right? Here's your Adam bottom. Here's your Eve. ARM, I like ARM. Actually, we might get into ARM later today, or I might put us into calls in the live options room. I think with some time and with, yeah, I don't know quite how to hedge this because it may take some time before it kind of gets back on trending track. But I really like this setup. I like the company, and I think this is a must-own stock heading into the next couple of years. We just cashed out a really nice trade in Airbnb. They've been doing these commercials on the NBA playoff games and now the finals, and they're really good commercials. I'm finding myself saying, "Hey, I want to do that." So you could travel to a different place. You not only stay in a nice place, but you also get to have all these experiences with locals. Right, a local person takes you into the museum. I hope they speak your language, otherwise, there's no point. They take you to the restaurants that nobody else knows about. They climb mountains with you, and to me, that's just awesome. I love to travel, and that to me is a very good new product line, and that should bring a lot of new revenue into Airbnb. But it was starting to fall quite hard earlier this morning. We took our profits. It was a beautiful trade, 123% upside on the calls, and we were only in it for about 5 days. Um, Datadog is a potential software play that I really like a lot. This is one of those that could very well benefit from defense contracts coming in that are related to the air missile defense. There's a lot, if the spending bill goes through, there's a lot of new money coming into that sector. Datadog is positioned to be one of those recipients. So I like it. The only thing I don't like is that it's in the blue zone and it's catching at the 200, and that's typically where you see things kind of cool off a little bit. But let's keep an eye on it. Same inverted head and shoulders pattern right there. PayPal is a good long-term hold in my opinion. Very undervalued. Still good growth. Still first mover in the space. I'm not so sure about Baba, but we have calls in the other room. They haven't really been performing just yet. We just put them on a couple of days ago. They got off to a good start. Now they're kind of stalled here at the 50. But I think if it can get above that 50 SMA next week, should do really, really well. And of course, everything in China is on hold until we get a deal. We're also long calls, or we were long calls in HIMS. I took profits on that because it started falling earlier this morning. But I may get us into the shares in this room, the live trading room, as it is pushing nicely off of the rising 21 period moving average. Now, it did it before, shot way up, and we did have a trade on in HIMS. Oh boy, I forget which room it was. And it was either that move right there or it was this move over here that gave us a nice profit. And I don't remember which, and I don't remember which room. Whether it was calls or the shares, I don't remember. Anyway, it's setting up again for another move like that. I like Uber as a longer term hold. NCLH, we have calls in the other room after seeing a lot of flow coming in earlier this week, and we got in at a decent time. LNTH and LQDT are both bottom feeders. They both have presentations next week at big investors conferences. I think LNTH probably is the better positioned of the two. We are long. Well, I'm long, and I've been sharing this in the room, but it's unofficial position. Shares of both companies, and I plan to hold through those investor conferences and just see where they go. They've been going up each day, even yesterday when the market was down. So that's a good sign. PSTG just came on my list. It's not really doing a whole lot today, but it's this, it's a kind of under the radar, long forgotten uh, uh, storage facility, and they are in the cloud space and they're in AI, and they have very good product line. It's just that nobody really talks about them anymore. I don't know why. But you've got that same, you're seeing this in a lot of tech. You've got the same inverted head and shoulders. It's not getting above the neckline. When it does, it should catch a nice bid. The fundamentals are very good. The quantum computing space is very hot today. You saw QBTS go up 12, 13%. RGTI, in my opinion, has better fundamentals. It has a better EPS per share, trades at lower valuations, but all the money today went into QBTS. There may be something behind that that I'm not aware of, but I like this setup in RGTI. It's a new uptrend. We have the pullback to the 21, the big flash crash yesterday, which everything did, and an inside day bar today that looks to me like that's the end of this pullback. It could shoot back up to 14, 15, 16 in a heartbeat. So keep an eye on that. Teva Pharmaceuticals is also setting up quite nicely. Nice cup and handle, the inverted head and shoulders, same thing, above the 21 and the rising 50. And that's about it. Okay, so let me take some chart requests. And I want to, it's 2:46 now. We'll spend about 10 minutes at the most doing this. Let's see how many we can crank out here. We did PLTR. Let's take a look at Visa. So Visa is on the IBD leaderboard. That caused me to put it on my watch list. I don't have it on this watch list, but I have it in my trading platform, and it is a beautiful cup and handle continuation pattern. So you'll see this, I think, a little clearer if we go to the weekly chart. Right. So clearly, it's in an uptrend, and it's up, 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 and then here's your consolidation move. Here's your cup, pretty deep one, and here is your little handle. You want to see that. You want to see a deep cup and a little handle, and that's where we're at. And it's kind of banging up again today on that line. I would buy it. You could buy it. I'm not going to buy it myself, but you could buy it. You'd want to put a stop, I would say, below the 21, so like around 358. And I would say this probably has an 80% chance of breaking out. And it's not an exciting stock. It's not going to make a huge move. Every now and then it does. Like that big green stick. That is a massive move. Here's a couple of big green sticks. Here's a big green stick, and here's like a 3-day nice looking move to new all-time highs. I'm not sure it's going to do that, but I'd say you've got a very good chance of getting up to 400 in the next 3 to 4 months. Okay, what else? That's Visa. CrowdStrike sort of came out with earnings. The market didn't like it. They were good, just a little light on guidance. Market cracked it down about 20 points. It wasn't a real big drop, and it's been bouncing back, and it was up nicely yesterday on a bad day, and some follow through today. Now, it's not looking real robust, but this is pretty typical movement for these cyber security plays. They tend to consolidate over, like a lot of things, they consolidate over 2 or 3 weeks, and then they boom, consolidate, boom. It's in a consolidation phase right now. It's discounting earnings. One thing I really like is that every time it drops, it gets bought back. So you could buy Crowd. It's certainly buyable right here. You'd put your stop underneath the low of a couple days ago, about 442. And I don't know where this is going to go because these are all-time highs, but maybe 550 from here by the end of the year. No, it's good. It is. I'm not sure if it's the first best of breed in the space, and it's a space that it has had its problems, competition coming in, regulation, but Crowd and Fortinet and maybe Palo Alto are kind of the big three, and any one of those three is a good position to have. I have Fortinet in my long-term family fund, and I've been in and out of Crowd a few times in the last few years, but I like both. I really do. Okay, BRKB. I haven't looked at this one in ages. Berkshire Hathaway. Hey, what's going on here with Berkshire Hathaway? Yeah, I mean, this could be the you have the A share and the B share. I don't know which one this is. This could be mostly about the real estate arm of the business rather than the managed fund by Buffett and crew. So I don't know enough to say whether that's true or not, but there's something wrong here because it's down here. The good thing about this one is that it didn't drop to new lows on the COVID. I'm not the COVID on the tariff crash. So I assume this is a kind of tariff-free play, but it's not doing very well. The only good thing I like It's not the only good thing, but it is. I don't know why. Why do I not have my two linear regression channels here? I don't know. I'm not hiding anything, am I? Linreg. Huh. How did I just lose? I just lost a lin. I just lost the other one. Anyway, I'm not going to put it back on now. I'll worry about that later. Here, let's do this. Let's refresh. And then now it's back. BRKB. There it is. Okay. So yeah, you're down in the pink zone. You're underneath the 200. Not a good place to be. You're underneath the 21. It's falling like crazy. 50 is falling like crazy. So yeah, I would just say it's an avoid for me. The only thing I like is that if you really, really think this is a good place to, because of valuation or because of uh, good steady growth or because of a dividend that you like, it's a good place to get in right here, right? It's low. It's still in a modest uptrend, but I just don't see it. If, in terms of a swing trade or a short-term trade, I don't think it's going to do a whole lot from here for a while. Okay, gold. Haven't looked at this in a while. I've kind of given up on trading both natural gas and oil and the energy sector in general, with a few exceptions, because for whatever reason, I mean, first of all of those that I just mentioned are showing some very messy charts, not trending charts, but just a lot of chop, up and down within ranges. The energy sector, however, let me take a quick look. ERX. No, it's still not that great. Still not that great. There's just a lot of mess, right? This is messy. This is messy. It gaps up like, oh man, it's gonna get going again, and then it's right back down again, and then you've got a big crash like that, and that just puts all kinds of selling pressure. People that were buying the dip here and buying the dip here, when it gets anywhere near that price, are going to start selling again. So anyway, that's ERX. You wanted cold. Let's look at natural gas itself. That's always best. So to me, this is more bullish than bearish. I know it's a downtrend. The price is holding at the 200 and the 21. It's not going to go anywhere anytime real soon, in my opinion. But and the volume balance is kind of leaning bearish, I would have to say. But we do have a fresh MACD buy signal below the zero line. That's often a time when new trends get started with that. Like here's one right here that had about a week and a half of follow through. I think something like that is probably going to happen here. Maybe it gets back up to about 1840 or so, 1850. But to me, it's not the kind of chart I would like to trade. So I'm not going to render a definitive opinion on gold. If you're already in it, just keep your stop at below a reasonable level, and if you do get some upside, roll it up with that upside. Let's take a look. VKTX, Viking Therapeutics. Okay, so the biotech sector, like small caps, has been beaten down, has hardly had a good stretch at all. But like the small caps, I think that both bios and smalls are going to have their day. Certainly before we get to the end of the year, they will have a nice run. And with the biotechs, you could see some of these individual names go up 30, 40% very quickly. This is a good one. It is, I know, well liked by analysts, tends to show stronger valuations and some good growth. Valuations, you're not really concerned about that with biotechs, but you want to see good growth. You want to see a healthy pipeline, and I think that this one has it all. However, it's been going nowhere and actually slightly trending lower for about a month, maybe a little more than a month. Volume balance is maybe leaning bullish, but kind of mixed. And that's the thing. When it's like this, for an extended period of time, your best trade is to wait until it breaks out to the upside. So I wouldn't say it's a buy right here. That said, I tend to like to buy inside of consolidations like this. It's a nibble, 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 but I prefer to buy near the bottom edge of the consolidation rather than the top. So I wouldn't buy it here. I would wait till it hits the 50 again, buy it there, or buy it on a breakout, and it's going to have to get above and close above that black line. That's VKTX. And let me do two more. Yeah, Sophie. We saw Sophie, and it's doing really well, and I think I need to call it. I think I need to put that in our live trading room. MSTR. So Bitcoin, I've been saying that it is not quite ready to get going. Where is it now? Where's IBIT? Okay, it's a bit off the highs. It was a nice looking, almost above yesterday's high, and it kind of pulled back a little bit. So this is actually pretty good for a bullish start to a new leg higher in Bitcoin. And I've been waiting for Bitcoin to show me something like this. I thought it would come down a little lower, 56, something like an ABC pullback, right? Here's your A wave, here's your B wave, sort of, and then another C wave down to about 56, which would be some gap support right there. By the time you get there, your 50 is probably in play, and it could still do that. But when it's pulling back, pulling back, pulling back, and then you get an inside day bar like today that is a reversal bar. It's not red, it's green. That tends to be a stop in the pullback. Sometimes you get a little bit of an upside and then it's right back down again. Sometimes it's the end of the pullback and you go back up. We don't know. We don't know whether either of those will happen until we see a few more days. So to me, Bitcoin is not yet a buy. That would mean MicroStrategy or strategy is not a buy yet. It's kind of doing the same thing, right? Because it will trade with Bitcoin. Here's your ABC pullback. I would say, though, what is this level right here? 360. 360 looks like a pretty good line in the sand. It tested that level several times. The 50 is right about there. And if it can pull back again to 360, you could nibble there. I would not buy it. It would either buy 360 or you would want to buy on a break of the downtrend resistance line, right? On a close above that line, it would be a buy. Okay, I'll do Apple and then see that new IPO. Okay, so I've been saying Apple is a no-go zone, no-go zone, no-go zone. I think we're still there, but it's starting to show some signs, right? We've got a close today, reversal of yesterday's bad news, red print. Above the 21, above the 50, everything's still downtrending. The LRC, the 50, the 21, the 200, all downtrending. It's been in a slump for a long time. And frankly, I don't think their production numbers or their new supply chains are yet in place. And wasn't it Apple that's talking about doing manufacturing in India? Am I right about that? Anyway, a lot of question marks with Apple. So to me, it's still a no-go zone, but I like that it is starting to show a little bit of upside move. Now, keep in mind, the NASDAQ is almost up at all-time highs. The S&P is almost up at all-time highs. Apple is way down here, nowhere near all-time highs. So is Apple in favor with the market now? No. Do you want to trade stocks that are in favor with the market? For the most part, yes. Are beaten down or bottom bouncers, okay, that's an exception, and you have to be very careful with those. But when it's a big leader in the market and it's out of favor with the market, you wait until it's back in favor with the market. So I'm just going to say again, it's not a short, but it's not a no-go. It's not a buy here. What would make it a buy? Well, certainly a close above the RTL. That's the black line right there. Getting up above the LRC would also help. And of course, ultimately getting up above the 200 period moving average would help even more. All right. I'll do one last one, but I'm not sure I'll have much to say on this because I think this is it's just 2 bars. So there's not a whole lot I can say. And I know nothing about the company. So William O'Neill has a system for buying IPOs. His general system is that if you can get in before the IPO and it's going to be a big hit, that's of course the best thing. But typically IPOs shoot way up on day 1, in this case day 2, and then they come back down and they test that IPO price. And then can buy in one of two ways. Let's assume it's a good IPO. It's a good company, strong fundamentals, and so they're going to keep going up. You can buy on a break of the downtrending line, right? So right about there in that little trough as it breaks the downtrend, or you can buy on a break of the high of the IPO day, right? So the high of the IPO day is way up here for CR. Let me move this right there around 104. So um, he doesn't really intend you to buy on this on day number 2. He's thinking about like 1 month out. So give this a month, maybe 6 weeks. If you want to gamble, that's fine. If you want to drill down to the 10-minute chart and trade that, you can do that too. But in terms of this daily chart, you've got to have some patience. All right, guys, I'm going to let you go. I will produce the video, get the link to you, and then we'll wrap up the last hour of trading together. God bless everybody. Have a great weekend, and we'll see you back in the room in just a little bit.